Silicon Valley Bank crashed, and this former CTO just made a huge bet that Bitcoin is going to $1 million within 90 days. What the f? All right, let's just get into it. It's pretty crazy what happened. We're gonna talk through what happened, and then I'm gonna share my thoughts on it, what I think that means for me, for you, for the United States, for the world economy in general. Also, by the way, smash the like button real quick for me. So it's been all over the news. Silicon Valley Bank is insolvent. The big thing that kicked this video off, a Twitter user who goes by the handle James Medlock tweeted, "I'll bet anyone $1 million that the US does not enter hyperinflation." Now, a former Coinbase CTO decided to take that bet. Just as in 2008, the bankers lied. This time, the central bankers, the banks, and the bank regulators have lied to all dollar holders and depositors. This isn't your typical fractional reserve situation. The problem is that there isn't enough in the banks on a mark-to-market basis to cover withdrawals. They knew this through all of last year and communicated it internally in their coded language, basically blaming the situation we are in on these banks buying treasury bonds that were trash because of the 2020 pandemic and inflation. And to be honest, the evidence is pretty wild. Balaji goes through and shows graphs and evidence, and we're gonna talk about some of that. The thing that's real cause for concern is something called tangible equity capital ratio. This ratio at central bank organizations fell to 8.7%. Tangible capital equity is an estimation of the liquidation that a firm has. So basically, if everyone withdrew their money, how much can they actually tangibly liquidate to pay this out? At year end in 2021, only 4 community banks had tangible equity capital ratios below 5%. That number increased to 333 at June 30th, 2022. And basically, this indicates that there's less of an ability to sustain during an economic shock. TLDR, if everyone pulled their money out of these banks right now, they could only pay 8.7% of those people. Now, Investopedia gives a great example of this. Say that XYZ Bank had for the fiscal year 2021 a book value of $273.8 billion. Its goodwill was $69.01 billion, intangible assets $2.2 billion, and preferred stock $24 billion. Thus, XYZ Bank's tangible common equity at the end of 2021 was $178.59 billion. $273.8 billion minus $69.01 billion minus $2.2 billion minus $24 billion, which are the intangible assets. The only difference in this situation is XYZ banks, only 8.7% of what they hold is a tangible asset that they can actually liquidate to pay out the US dollars that are in their customers' banks. We were never notified that this was happening. Balaji says instead, the regulators allowed banks to hide their literal insolvency in footnotes until one guy figured it out. It's Uncle Sam Bankman-Fried, just like SBF, used your deposits to buy coins, using account tricks to fool himself and others into using the money, so too did the banks. They all used the deposits to buy the ultimate coin, long-dated US treasuries. And they all got wrecked at the same time, in the same way, because they bought the same asset from the same vendor who devalued it at the same time, the Fed. Specifically, as New York Times admitted, banks binged on enormous amounts of treasuries and other long-term bonds in 2021 when the flood of printed money cut off their typical demand for loans, and because they thought the Fed would keep interest rates low forever, which they did have good reason, because Powell did say that he would be patient in raising the interest rates. Then he got renominated in 2021 and the rates hiked faster, a lot quicker than anyone expected. So what does this mean for you, for me, for the United States, for the global economy? Well, Balaji predicts that this is going to be hyperbitcoinization. Balaji's not the first one to make this prediction, that Bitcoin would become the main store of value. We think back when we used something called the gold standard. I've talked about this in videos before, because the gold standard was basically saying that the US dollar was backed by gold, a rare precious metal that could store the value of the US dollar and basically back the claims of what it's actually worth. We switched from that and basically valued the US dollar based on the US economy. Yeah, crazy, right? The other piece of evidence that is really, really interesting is that that you have not smashed the like button yet for the YouTube algorithm. So make sure you do that. So basically what's happening is we've had multiple economic disasters, and we're on the brink of what could be the biggest economic disaster of all time. Now, I don't think that means that everything's gonna crumble, and I will explain why in just a little bit. But basically, Bitcoin serves as a store of value, and because it's a literally finite asset, there are only a certain amount of Bitcoin and they cannot produce any more. It makes it extremely easy to value what one Bitcoin is worth based on the US dollar, as opposed to the other way around, which most people do, saying, well, a Bitcoin is worth however many US dollars. Instead, it's going to flip the other way, where the fiat currency is reliant on a store of value like Bitcoin. And so Balaji's prediction is this hyper-Bitcoinization, where it's going to start with retail investors, then it's going to move to larger funds that buy Bitcoin, and then sovereign nations, and then states, and eventually the entire global economy. Because let's be honest, majority of the global economy relies on the US dollar as their store of value. Pretty crazy, right? Right. Now, the last thing I want to talk about is where to get Bitcoin and where to store it, why that's important. And it all starts back in 1933. Executive Order 6102.
Execute Order 6102.
The TLDR, it was forbidding the hoarding of gold, which essentially gave the Fed the option to buy back gold from people at an extremely cheap rate. An example of this would be if they decided to make an executive order for Bitcoin, even after it hits $1 million, they could come back and say, wait, it's actually only worth $27,000 per Bitcoin. And so we're gonna force you to give it back to us. We're gonna pay you $27,000 per Bitcoin. And keep in mind, this could happen even after people pay $1 million for one Bitcoin. And honestly, if they did it, I know we're only at executive order 14,000 something, but they would probably do something ironic just to rub it in people's faces and call it executive order 69,420 or something like that.
Execute Order 69,420.
This is why people advocate so much for cold storage, because essentially that takes the Bitcoin off the market and the government doesn't necessarily have access to it, as opposed to centralized exchanges. And even DeFi platforms can really create a lot of problems, making it so that you can't withdraw your cryptocurrency. Of course, Ledger is the GOAT. There is a link for that down in the description if you want to get yourself a Ledger. Now, of course, a lot of people make jokes about losing their Ledger when they were out boating or something like that. And essentially what they're doing is they're trying to, number one, evade taxes, and number two, avoid a situation like this where an executive order could potentially make them give up their Bitcoin at an extremely low price. Now, the number two way to get and store Bitcoin is going to be a short-term exchange like Crypto.com app. I personally am a big fan of Crypto.com because it allows me to turn my crypto into fiat like that. And also they do have a special going on. If you stake $400 for the Ruby Red Crypto.com Visa, you and I can both get $25 in CRO tokens absolutely free. And of course, you don't have to keep your cryptocurrency on that exchange. But I do like the convenience of it, and I think they are the happy medium between centralized finance and decentralizing with cryptocurrency. Now, of course, if you want to get the Ruby Red Visa, there is a link down in the description. So feel free to use my code C3D, and you and I will both get that bonus. Now, obviously, the last place that you want to store your cryptocurrency probably would be on an exchange, because those can be regulated very, very heavily. My personal favorite is KuCoin, though. I really do like the platform because they just have so many features and abilities. And for my needs, it's been extremely versatile. They list so many coins. They constantly onboard new ones as well. And so the functionality is really, really good. The exchange is where I go to buy my Bitcoin or any other crypto for that matter, because you can put in limit orders and things like that. You can basically get the best price for that cryptocurrency. Then what I do is I transfer it out. Like I said, short-term holdings, I use Crypto.com typically, and then long-term holdings, I use a Ledger or other cold storage. And once again, this is nothing new. I'm not the only one saying to get cryptocurrency off exchanges. Now, the bottom line, this isn't financial advice. I personally am doing my own research still. I still do have some cryptocurrency in places that aren't cold storage. And so if hyperinflation happens, it probably will happen quickly. But just like in 2008, I do expect the government to do some hedging. And that could include creating an executive order to essentially confiscate as much Bitcoin as they can. And if you think about that, it's not necessarily a horrible thing, because if the US economy fails, hundreds of millions of people will suffer. Millions of people would probably die. You have one step ahead. You're watching this video. And for me, trying to think a few steps ahead to be prepared, to hedge against things like this, like an economic crisis. And that's essentially what's happening in a nutshell. But I really would love to know your thoughts as well. So if you haven't, go ahead down in the comments. Let me know what you're thinking about Balaji's $1 million bet, what you think about the crash of Silicon Valley Bank, and the tangible capital equity ratio. Of course, if you haven't liked this video, make sure you do that, because it does help very, very much. And make sure you subscribe, because I do have a lot more content coming about crypto, tech, investing platforms, and all of the like. And with all that out of the way, thanks for stopping by. My name's Chris with Committed 3D Tech, and we'll catch you next time.